Yes, Mr. Hodge.
Commissioner, the next witness is Mr. Perry.
Just give us half a moment, Mr. Perry. We'll give you some space in which to sit and put your papers. Now, perhaps, if you can go into the box, Mr. Perry. Water will be provided, Mr. Perry. Now, Mr. Perry, do you wish to take an oath or
I'll take
have an affirmation?
Thanks.
Yes.
I swear by Almighty God
I swear by Almighty God
that the evidence I shall give
that the evidence I shall give,
will be the truth,
the truth,
the whole truth,
the whole truth,
and nothing but the truth.
and nothing but the truth.
Thank you very much, Mr. Perry. Do sit down. Yes, Mr. Sherry.
Mr. Perry, what is your full name, sir?
Sorry. Brett Robert Perry,
And what is your business address?
201 Sussex Street, Sydney.
And are you a general manager of group credit structuring within CBA?
Yes, I am.
And have you made a witness statement in relation to rubric 326, the ID number of which is CBA.9000.0052.0001?
Yes.
Do you have a copy there?
Yes.
I'll come to a couple of corrections.
Sure.
But I should have asked you, did you also receive a summons to attend the Royal Commission and give evidence?
Yes.
Perhaps I should tender the summons first, Commissioner.
Exhibit 3.92 will be the summons to Mr. Perry.
And Mr. Perry, if you have the witness statement there, please. I understand you wish to make a correction to paragraph 55.
Yes, I do.
What's the correction? What is the correction, sir?
I'd like to remove the words, the final words, rather than as a result of a policy of BankWest.
And would you strike those words out with a pen and initial in the margin, please? And I understand the next correction is in paragraph 70, subparagraph B. Is that right?
Yes.
And what's the correction there?
I'd like to change the date from currently 2012 to 2010
It's in the second line.
in the second line.
Did you make that correction and then initial the margin? And finally, sir, in paragraph 85,
Yes.
I understand you wish to correct a misspelling of a word.
Yes, I'd like to correct the word of publicly, the fourth word of paragraph 85.
With those corrections, Mr. Perry, are the contents of your witness statement true and correct?
Yes, they are.
I tender that, Commissioner.
Exhibit 3.93 will be the statement and exhibits of Mr. Perry in relation to rubric 3-26.
Thank you, Commissioner.
Yes, Mr. Hodge.
Thank you, Commissioner. Mr. Perry, I think you've explained you're currently the General Manager of Group Credit Structuring at the Commonwealth Bank, is that
Correct.
right? And group credit structuring is what deals with what is sometimes referred to as troublesome or impaired assets, is that
That's
right?
correct, yes.
That is, in broad terms, assets where either the bank has impaired them, that is, it does not believe that it will manage to recover the full amount of what it has loaned out or is entitled to, or are troublesome where there is a risk that might
The
occur.
higher credit risk, yes.
And we've heard some references to CAM, which is Credit and Asset Management.
Yes.
CAM was a section of BankWest,
It was, yes.
and that section effectively performed the same function as in relation to BankWest assets as your GCS section performs in relation to CBA assets.
Correct.
And the CAM section from BankWest has now been rolled into GCS.
Yes. We merged in, I think, around 2012, yes.
And you've been put forward by the Commonwealth Bank as the witness to give evidence about the situation of Mr. Kelly and Silver Sun and Wildlines.
Correct.
You weren't involved directly in the dealings with Silver Sun and Wildlines?
No, as I've said in my statement, I've never worked for BankWest.
And you have been, or you were, the head of GCS back in 2000, well, back for about 9 years or so, is that
Yeah,
right?
in its former names, yeah, but in CBA.
All right. But never in relation to BankWest.
Never in relation to BankWest.
And so I just want to make sure that everyone understands, when you're speaking about this is not something that you were directly involved in?
No, I'm speaking by reviewing the file.
Yes. And we'll go through a few things, but where you've had to make commentary about what has or hasn't happened, you've just had to effectively derive that from what you can see in the documents.
Yes.
All right. Now, I want to start by having a look with you at the original loan assessment, which you've looked at. Can we bring up BRP-4? That's CBA.4000.0058.7297. It's CBA.4000.0058.7297. This is an internal document that you've exhibited to your statement, Mr. Perry.
Yes.
And this is the credit risk, although it says facility amendment, this is for seems to be for the original facility in relation to Wildlines to buy just the first property.
Yes.
So it's just for the 1.75 million or so.
Yes.
And then ultimately, as we know and you know, that was then amended and increased, is that right?
Yes.
And if we go to page .7298, we see in the middle of the page, there's an explanation which is clients have paid down the Zengold debts.
Yes.
And can you just explain, so we might take that down because that's not been properly redacted. Do you have a copy of the document there?
Yes.
We might just work off your...
Was it B4? Was it?
BRP4. Thank you, Mr. Perry. You're on page .7298.
Yes.
And that refers first to clients having paid down the Zengold debts. Just wanted to understand, have you familiarised yourself or are you aware of what the situation was with Zengold?
No, I only looked at the Wildlines and Silver Sun.
Okay. You're aware then, I assume, from looking through the documents and the references in the documents that these particular players had some previous special purpose entity that they'd used to borrow money from BankWest? Yes.
One of the things I noted on the file early is that they were quite experienced and syndicated property investors.
Yes. And then the other thing that you can see then is that there's a reference to SPs, which I assume is statements of position.
Yes.
And it's explained that the statements, or what these statements of position are for the following key players, and it runs through who the main investors are.
Yes.
In the syndicates.
Yes.
Or in that syndicate, said the above provide the majority of the shareholding in this new venture and have been involved in the successful Zengold Project 2. Their vast expertise and asset position suggests that they can adequately cover any contingencies should the need arise via other resources. Added comfort can be taken in the fact that above income streams does not include their spouse's additional revenue.
I see that.
And then if we go over to page .7301, which should start at the top, credit risk submission. It's up on the screen now, if that helps.
Yeah, yep.
And I just wanted to ask, you see the risk grade is said to be 6.
Yes.
Could you just explain to the Commissioner what that means about the riskiness of the asset?
Yeah, from my research, the BankWest risk grade system was, I think, from 1 to 10, and if I recall, risk grade 6 was, I can't recall how it was, but it was mid scale, a bit beyond mid scale. Yeah.
Sorry, it was. Just repeat what you said, I'm sorry.
I said mid scale.
Mid scale, yes.
And then if we go to BRP-18, which is CBA.0517.0096.1700. No, CBA.0517.0096.1700.
Yes.
So this is the credit risk submission for Silversun.
Yes.
And again, you've exhibited this to your statement.
Yes, I have.
And the risk grade for this is also said to be 6.
Correct.
And then if we go over the page to .1701, we just blow up the bottom 3 paragraphs of the page. And what's being recorded in the credit submission is that there's initial loan term of 3 years, which will then coincide with a property revaluation, and the strategy of the syndicate is to hold the property for the next 3 to 5 years and complete the rezoning.
Correct.
And what I'm interested in understanding is that typical in your experience that property developers might have a strategy that extends beyond the length of the facility?
It's not. I would expect that the term of the facility should match, particularly for a project finance sort of structured finance arrangement. It should match the end of the term, and the issue with requesting a 3-year term is that there always is a refinance risk, which as sophisticated developers, I'm sure, and they're aware of that risk. And the refinance risk is you assume and you take the risk as an investor, as a property developer, that at the end of that term, either the term will be extended, the facility will be extended, and that whether the facility will be extended at all, rather, and it may well be extended on different terms.
Yes, I understand.
Sorry, long way.
And we'll return to that point in a moment.
Yep.
Can we go then to BRP-25? And that is CBA.4000.0074.5769. So this then is a credit risk review that happens for Wildlines in July of 2008. You can see, if we go over the next page, that might be easier. If we go over to .5770, I'm sorry, I said July, it's actually August. Do you see that up in the top left hand corner of the page? Prepared and recommended by.
Ah, yes, yes.
And if we go over to .5771, and at the bottom of the page, we see a section pricing.
Yes.
Can we just blow up that section? And you'll see it said current pricing is based on BBSY rate plus a margin of 1.75%. It is noted at time of approval, comments by John Sullivan stated that a gearing level of 60% and RAROC, what does that stand for?
Risk-adjusted return on capital.
Circa 40%, a 1.5% margin was satisfactory. Proposed for pricing to continue at current margins to be reviewed upon development of funding.
Yes.
Now, I'm interested, because we'll come back to this over and over again, in understanding what happens here, because we know it doesn't stay at a margin of 1.75%, it rises to 2.25%.
Yep.
Are you able to explain to the Commissioner what's the bank trying to factor in
terms of the...
changing it from 1.75% to 2.25%?
From my review of the file, the offer had a different date or different rate. Well, I think that's what we're going to. There would have been an approval that I couldn't locate on the file by the credit signing off on this final approval. Yeah.
What I'm trying to get you to explain is something else, I think. Maybe if I bring up another document to help you. Can we bring up RCD.0014.0015.0002? So this is an email sent from Mr. Steele, who's the relationship manager we've seen named, that says, due to the nature of the facility land bank, the pricing has been increased to BBSY plus 2.25%.
Yes, I see that.
So does that assist then to understand and just explain to the Commissioner what the thought process to the setting of the margin?
So if you go back to your previous document.
Yes, that's BRP-25.
So I don't know. I don't know why that's changed, but this document does say that the drop in RAROC is a result of the land being classified as a specialised asset, which may have contributed to the approval to increase pricing, but I don't know.
Is it, you give some evidence in your statement about how the bank goes about setting its interest rate margin.
Yep.
Is it, there's nothing sinister about this question, is it possible that BankWest has made a decision in 2008 that it's going to adjust the pricing that it's charging for land banking?
I don't know.
You don't know, all right.
Know.
And so perhaps if we can consider this, because we'll come to it in a moment, is one of the issues that was becoming apparent in 2008 that there was increased risk associated with property development and with englobo development?
I don't know the timeline, but if we go...
We don't need to do it in the context of this.
I don't know in this particular timeline, yeah.
But let's put aside what's happened in Wildlines and Silversun. You were the head of GCS as at 2000, or you're about to become the head of GCS as at the end of 2008.
Yeah.
You've been in banking for
Mhm.
34 years, is that right?
Yes.
If you cast your mind back to 2008, which is as the GFC is
Yep. Yep.
unfolding,
Mhm.
do you recall it being obvious that there was increased risk associated with property development and in globo land
Okay.
development?
So my opinion, not related to this file,
Yes.
of course, but there were, after the GSC, there was concern about the impact on property. Yeah.
And in terms of your understanding of the process of setting margins, which you've given some evidence about, is one of the factors that's relevant to the setting of the margin what the risk is that the bank associates with a particular loan?
Yeah. So if to summarise it, the two elements are customers and markets, and because that's one of the that's the key, particularly in this transaction.
And when you talk about market, does that mean the particular type of lending that's being engaged in?
Correct.
Right.
So I think I refer into my statement as industry, which would apply to any customer, a review of the industry that they operate in.
Right. Now, at the end of 2008, CBA acquired BankWest,
Yes.
and you're aware that there was a review or a series of reviews that were undertaken of the BankWest portfolio?
I was aware. I was aware of it, but I wasn't involved in it.
Okay. What I'd like to do is some documents. It may be that you're able to assist us with these. It may be that you're not. Can we bring up CBA.0002.2076.7461? This is a submission to the Risk Committee of BankWest for a meeting on the 25th of March 2009.
Right.
Have you seen this document before today?
No, I don't
Okay.
recall seeing this.
All right.
It wasn't on the file.
It wasn't on the
I don't recall seeing it on the file. No.
on the file for Wildlines
Yeah.
and Silversun.
Yeah.
All right. Are you aware that BankWest had identified that it had a very significant exposure to what it defined as commercial property?
I became aware of that from a review of this file. Yes.
Okay. Are you aware that you see the second dash point under key findings that commercial property represents 50.3% of total committed exposure?
Sorry.
Do you see the second dash point under key findings at $14.2 billion, commercial property represents 50.3% of total committed exposure?
Yes, I see that.
Were you aware that it was of that magnitude?
No.
Okay. Were you aware that there was a concern within CBA about the level of exposure on the BankWest book to commercial property?
No.
Were you, all right, were you aware that there was a concern about the worsening of risk associated with commercial property?
Well, I think that was, my view is that was a concern right across CBA as well.
All right. Were you aware that there were decisions that needed to be made, I shouldn't say needed, there were decisions that were made to attempt to manage that risk for the BankWest portfolio by setting caps on the amount of commercial property exposure?
I wasn't, no.
Okay.
I am aware today of the concept of caps and targets we have in CBA on industries, but not then.
Okay. Are you aware now that in 2009, BankWest started to introduce internally caps on the extent of its exposure to commercial property?
I'm aware now. Yes, not then.
Sorry?
Not then.
No, I
Yeah,
understand.
yeah.
But again, you're now coming now to look
Yep.
back at a file
Yeah,
from
yeah.
2010.
Yeah.
it's important that we be able to put this in some sort of
Yep.
context, which is, as you understand it, as at 2009, first BankWest had a significant exposure to commercial property. You agree with that?
Yes.
Second, it was regarded as an overexposure to commercial property.
Yes.
Third, that in order to manage that overexposure, there were caps that were in place on the lending in commercial property.
As a result of the review of this file, I understand that, yes.
All right. And then that has a ramification to the approach that's taken to the management of the book. You agree with that?
Yes.
What does that mean? The witness says
Well,
he
if the
hasn't seen...
witness doesn't know, he will no doubt tell me, Mr Sherry.
Well, the question doesn't make sense, Your Honour, with greatest respect.
Yes. Well, Mr Hodge, do you want to rephrase the question?
No, that's fine. I don't want to rephrase the question. Can I take you then to paragraph 59 of your statement, Mr Perry? Can we bring up paragraph 59 of Mr Perry's statement? What you say in paragraph 59 is that you're not aware of any BankWest records that indicate that there was any general policy to withdraw from funding property dealing for existing customers before the facility expiry date.
Not general policy. There was an email that I saw, but I didn't see a policy document.
Right, well, if we bring up BRP-23 CBA.0517.0096.5020. This is the email that you've referred to.
Yep. And
can I, perhaps to assist, just bring up a more legible version, which is CBA.002.2078.8755. CBA.0002.2078.8755.
Yep.
All right, and then can we go to page .8757? This, I hope, in slightly more legible form, is the email that you were referring to, Mr. Perry, sent by Mr. Clark.
Yes.
And this is the email that's informed your understanding of the risks in BankWest.
Yes. Yes.
And what you understand is that there was this concern, which was 51% of assets have been classified as commercial property, and there was a target by the end of 2009 to reduce this to 45%.
Yes.
And then there's a series of things that are set out as the following actions that need to be taken at a minimum.
Yes.
And the point that you're making in your statement is that these actions are not concerned with attempting to terminate existing facilities before those facilities reach their expiry date.
Sorry, can you ask the question again?
The point that you're making in your statement in paragraph 59 that we looked at before is that these actions are not concerned with trying to terminate a facility before the facility has reached its expiry date.
I'm not saying that. That's why I amended my witness statement from the previously, paragraph 50.
Yes, what you're trying to say is BankWest isn't trying to exit early from loans that it's already made that have an expiry date and that aren't in default.
Correct.
But what goes along with that is when the facility hits its expiry date, BankWest may not renew that facility. And that's a different thing.
It's a different thing, yeah.
And the borrower enters into the facility at the time they enter into it, they understand, or they ought to understand, that it has a particular term.
Correct.
And the borrower takes the risk that as at the end of that expiry date, BankWest may be willing to refinance.
Or may not be willing to refinance on the same terms. Yeah.
That's right, may just not be willing to extend the facility or may not be willing to extend it on the same terms.
Yes.
That's your point?
Yes.
And that's the same for any borrower that's dealing with a bank.
Correct.
And one of the things that you understand that happened within BankWest was that once this level of risk associated with borrowing for commercial property was identified, that there were then caps that were put in place to try to reduce the level of borrowing for commercial property. And the consequence was that when it came to considering extending a facility or refinancing a facility, that these policy would be relevant.
Yes.
Because extending a facility is not terminating a facility early, it's making a decision that the bank wants to continue or enter into a new relationship.
At the end of a term, yes.
That's right. And that is the point that you were trying to encapsulate in 59 of your statement.
Could I go back to 59?
Sure.
Just reread it. Yep.
And as to... I'm sorry, go on.
No, you can.
No.
My point of paragraph 59 is the question referred to, if I can just read it. The question referred, the Q3, indicated that BankWest was withdrawing from property dealings for existing customers. Withdrawing, I took to mean that you just withdraw during term of the facility, and that's what I meant by paragraph 59. We wouldn't be withdrawing during term; that we let the term run its natural. They'd let the term run its natural term.
That's right. And that's what BankWest did in relation to the Wildlines and Silversun facilities.
Correct.
And on your review, there's nothing that suggests that BankWest tried to look for some default to terminate the facility early.
Before the initial 2 years and 3 years, no.
And in fact, what happened is just once it got to 2010, BankWest wanted to reduce its exposure to commercial property, and therefore it evaluated extending the facilities in that light.
You mentioned 2010. Are you talking Silversun or Wildlines?
Well, both Silversun and Wildlines get extended in 2010. But I've jumped you forward. Would you like to?
Yeah,
let's go back. In 2009,
Yep.
BankWest has a policy that it has implemented. It's considering whether to extend the Wildlines facility. It considers that in light of its policy, is your understanding of the document?
Yes.
All right. And there's something that you say in your statement which is at paragraph 25. We bring up paragraph 25 of Mr. Perry's statement. This is about a meeting that occurred on the 8th of June 2009.
Yes.
And this is the meeting where Mr. Kelly says he was told that BankWest did not want to continue with the Wildlines facility and would likely ask for the loan to be repaid on 31st of August 2009.
Yes.
And what you say in your paragraph is that, apart from the fact that there was a meeting on the 8th of June, the records that you reviewed indicate that the summary of what happened at that meeting was incorrect.
Let me just think.
Can I help you, Mr. Perry?
You help me and I'll...
Again, it's not a trick. What you looked at was the file note, or what appeared to be a file note that had been provided to you or that you found on the file. Is that right?
Correct.
And it had a signature on it.
Correct.
You assumed it was a file note.
Yes.
It didn't contain any reference to the fact that Mr. Kelly had been informed that BankWest didn't want to extend the facilities.
That's correct.
And you, naturally enough, just had to go off what records you could find on the file.
Correct. Correct.
But what you now understand is that wasn't actually a file note of the meeting. That was, Mr. Kelly says, that were the notes of what he was going to say at the meeting.
I understand now.
And what Mr. Kelly says was said at the meeting is something that is then reflected in an email that Mr. Chapman sent shortly after the meeting, and you've exhibited that.
Yes.
So I take you to that. It's BRP-13 CBA.0517.0100.0001. So you looked at this email before,
Yes.
and insofar as Mr. Chapman says the bank has recently made a decision to cease funding new property dealings for both non-bank and existing bank clients, that reflects your understanding of the policy direction that had been taken by BankWest.
Yes.
And what Mr. Chapman then says a little further on is, although the annual review is not yet due, it is likely that the bank may not renew the Wildlines facilities on expiry at the end of August.
I see that.
And again, that just reflects what it is that Mr. Kelly says was communicated to him at the meeting in June of 2009.
Yes.
And as it turns out, BankWest was prepared to extend the Wildlines facilities.
Yes.
And what BankWest wanted to do was to extend them, but nevertheless to exit from them as soon as it was practically possible to do so.
Yes. I think there was a reference in Mr. Clark's note. Yes.
I'm sorry, could you say that again?
So refinance was referred to as an option, and that was what was being communicated here.
Yes, what BankWest wanted was for Mr. Kelly's syndicate to refinance with somebody else.
Correct.
And that consideration reflected the view that at a general level, BankWest was overexposed to commercial property.
Yes.
And you would say that is a prudent risk management approach on the part of the bank.
Yes, it is, and a regulatory approach as well, I would add.
All right. And there was ultimately some negotiation as to the terms on which BankWest would be prepared to extend the loan.
Yes.
And BankWest originally...
Sorry, can I just
Yes.
clarify? The loan had expired, so it was the loan had expired and it was a new facility that needed to be put in place.
Yes. That's right. This is
Clarity.
whatever is happening here, these are new contractual arrangements
Yes.
that are being entered into.
Yes.
All right. And there's a negotiation over the terms of those new contractual arrangements.
Yep.
On the one hand between the bank and on the other hand at arm's length with the borrower,
Yes.
Wildlines. And BankWest's original position, which was a 45% LVR with a particular pricing, wasn't in the end what was adopted.
No, it wasn't.
The LVR ended up being 50% with a slightly higher margin rate.
Correct.
And as you understand it, that reflected the evaluation of the risk that the bank was prepared to take on in entering into this further facility.
Yes.
All right. Now then in 2010, Project Magellan occurs.
Yes.
Are you familiar with Project Magellan?
I knew the name at the time, but I wasn't involved in it, so no, I didn't.
All right. Do you have an understanding now of what Project Magellan was?
Only from a review of information.
All right. Well, could you just explain to the Commissioner what your understanding is now of what Project Magellan is?
My understanding that as a result of concerns around exposure, I don't know what qualifying customers were asked to be reviewed. That's all I know about Magellan.
All right. Do you understand that it was a review part of deciding whether adequate provision
I don't know.
had been made?
I don't know.
Okay. All you know is, from what you can see on
It
the
happened.
file, that there was a
It
review of
happened.
some
Yep.
files. All right. Okay. And then can we go to BRP-56? Which is CBA.0517.0096.1871. So this is the Project Magellan file review,
Yes.
and we can see that this was completed on the 25th of June 2010.
Yes. Yes.
And I understand you've reviewed this document in order to give evidence to the Commission.
Yeah, I reviewed this document as part of my file review.
Okay. And then if we go to the page ending .5, we see this is a section that's completed by the reviewer,
Yes.
and the reviewer is not somebody from CommBank or BankWest. Do you agree with that?
Yes.
It's somebody external, in this case Grant Thornton,
Yes.
and those two people have completed a review of both borrowers as at the 13th of May 2010. And they set out, we can see on the first page, various matters that they've taken into account. On that page. And then if we go over to .1876, they set out various other things, including what they considered to be the various risks associated with the borrowings.
Yes.
And they note that the risk grade for one is 6 and for the other is 6, but for the second one that it's likely too low.
Yes.
And then if we go over and I'm sorry, I should say, do you know B2 is Silver Sun?
I think there was reference to it. No, I didn't. Reference on the previous page.
All right, you understand that one of them is Silver Sun and one of them is Wildlines?
Correct.
All right. And then if we go over the page to .1877, there's then some conclusions set out as to what the recommendations are.
Yes.
And in relation to B2, which I'll suggest is Silver Sun, it said that evaluation is required.
Yes.
And then if we look at the project recommendation, it's red for again, I'll suggest Silver Sun with an urgent valuation required of Silver Sun's property.
Yes.
And B1, which is Wildlines, is considered to be green. Now, if we go over the page to .1878, this is now a separate section. This is being done by the BankWest review panel.
Yes.
And the panel decision is that the files should be moved to CAM,
Do that.
and that the risk grade for each of the files should be 7+,
Yes.
and that they should be classified as red. Yes?
Yes.
And you see CP adjustment not accepted. CP stands for collective provision.
Correct.
So collective provision adjustment not accepted, and then there's some recommended actions.
Yes.
And one of them is that CAM is to manage the file.
Yes.
The second is that the LVR is to be reduced to 50%. You see that?
Yes.
The third is that there's to be a recalculation of collective provision.
Yes.
And then the fourth is that Don, who presumably is Don Galbraith, is to review and advise.
Yes.
And what was Don Galbraith's role?
I understand that he was head of CAM at the time.
All right. And do you know why there was this difference between the decision made by the review panel and what had been recommended by the Grant Thornton reviewers?
No, I don't.
Okay. Have you made any inquiries to try to understand that?
No, no, I haven't.
Did you realise before now that there was this difference in approach?
I realised, I realised that the yes, the difference, yeah.
Right. But you're not able to assist us to understand why there's that difference? All right. Is it... Perhaps if we then have a look at another document, which is BRP-57. So this is a strategy paper dated the 9th of September 2010.
Yes.
Now this is a paper from Greg O'Brien, who is in CAM, to his manager in CAM. I'm sorry, I'm told we have to take this down because these names are also subject to a non-publication direction. Could I get you to go off your volume?
Sure. What?
It's BRP-57.
Okay, I've got it.
And it said the group name is described as Zengold Corporation.
Yes.
As you understand it, though, there's only two borrowers that are being dealt with as part of this. One is Wildlines and the other is Silver Sun.
Correct.
And the group risk grade is 7+.
Yes.
And that reflects the decision that had been made by the Project Magellan panel.
For Wildlines in Silver Sun?
Yes.
Yes.
And then if we go over to the page ending .5597,
Yes.
you see the section at the top of the page which is reasons for impairment.
Yes.
And we can probably bring that page up. I think that won't be covered. So this is the review explaining, this is the section of the strategy paper explaining why it is that these loans have been impaired.
Yes.
Because, and we probably need to draw some distinction here, there doesn't appear to have been a specific provision made for these two loans.
Didn't see a provision during my review. That's correct.
Insofar as there's a provision, it's just as part of the collective provision.
Yes.
And could you explain to the Commissioner the distinction between specific provision and collective provision?
Okay. A collective provision is calculated on a formula basis based on the risk profile of an exposure. A individually assessed provision is a manual assessment of the loss on that particular exposure.
And so in the case of a collective provision, that might be a collective provision made for a particular part of the book that is in a particular area or industry or something like that. Is that right? Or is it more complicated than that?
It's a little bit more complicated than that.
All right. Do you think it's necessary to explain to us any more than what you've said about what is a collective
Not unless
provision?
you want to. But,
I don't think we do. So what happens then when you look at 2.2 is that it's setting out the points that have been made by the Magellan Review and Grant Thornton, and then the recommended course that have been taken by the panel.
yes.
And then it notes that at present there were no defaults, either monetary or non-monetary,
Yes.
but a revaluation of the security was occurring.
Yes.
And it was possible that that revaluation might result in a breach of the LVR covenant.
Yes.
In fact, we know that didn't occur.
It didn't occur, no.
In fact, the revaluation increased the value of the property and therefore decreased the LVR.
Yes.
All right. And then if we then go to CBA.4000.0074.8586, have you seen this document before, Mr. Perry?
Yes, I have seen that document before.
Okay, in the course of preparing for evidence. Is that right?
Yes.
And Frank Howen is or was a senior manager at Business Credit.
Yes.
Business Credit was one of the divisions of BankWest.
Yes.
Another division was Property Finance.
Yes. Business credit was, yes, probably in risk management, but I'm unsure.
Oh, you think that might have been in risk management,
Yes.
that section?
Yes.
All right. This is an analysis then that's being provided by Mr. Howen to Don Galbraith, who's the head of
Yes.
CAM at the time.
Yes.
And you see at the end of the email, Mr. Howen expresses the view, I don't consider there to be any basis for this group to be placed in CAM. However, there is a reasonable likelihood the Wildlines and Silver Sun exposures could lead to significant land development financing opportunities in the next few years, depending on property appetite at the time. As a result, it may well be better placed with PFU.
Yes.
And PFU is what we were talking about, property finance.
Yes.
Do you know why it was, or have you been able to ascertain why it was that the group was placed into CAM?
I did ask the question, and the only thing I can ascertain is CAM decided that they'd go with the recommendation of Magellan and put it into CAM.
Right. Commissioner, is
So-
that a... oh, sorry, go on.
So, can I comment on
Yep.
this one? So, my only comment on Frank's note is he was asked for an opinion and he's given it. He's entitled to his opinion. That's one perspective. I note from the review of the file further on that Frank's boss, I think, the manager, had a different view to Frank. So it just demonstrated to me that there was a little bit of uncertainty around the different views.
And whether it should be in CAM.
Yep.
And who is Mr Howen's boss that you're referring to?
John Howe.
I see.
Yep.
Is that oh, I'm sorry, actually, can I ask one more question?
Mm.
When you refer to the view of Mr Howe and later in the file, is that from early 2011 that you're speaking
Yeah, I
of?
think it is. I think it might be on the way on the other side of when it came out of CAM.
Yes,
Yeah.
okay. Commissioner,
Is
is
this
that...
to be tendered? This
Yes, Commissioner, I tender that
email?
document.
Email Hound to Galbraith, 26 May 2010, CBA 4000 0074 8586, Exhibit 3.94.
Commissioner, is that a convenient time?
Yes. 2 p.m. Yes, Mr. Hodge.
Thank you, Commissioner. Mr Perry, before lunch we dealt with the file in relation to Silver Sun and Wildlines being moved into CAMS. And then, as you know, there was a meeting that occurred on the 29th of November 2010 after CAMS had become involved with the file. You know that? About the meeting on the 29th of November?
Yes, could I have a look at the document?
Sure. Why don't you go to BRP-34? So that's CBA.4000.0072.0227. Now, we've seen already, well, the Commissioner's seen already up on the screen, Mr Kelly's file note of this meeting, but this is an internal bank call report note that's been prepared. Is that right?
I believe so.
And you've reviewed that for the purposes of giving evidence?
Yes.
And you know that one of the complaints that Mr Kelly has is that as at the end of December 2010, when the offers were sent out, that the offers did not reflect what had been discussed on the 29th of November 2010.
Yes, I do recall that.
And do you agree that BankWest's own internal note does not reflect the conditions that were to be imposed as part of the offer?
Can I just recall the conditions?
Yes, would you like to, why don't we bring that up? So if we put the note on one side of the screen and on the other side bring up the next document, which is BRP-35, CBA.0517.0096.1901. So, and then if we go to the third page of the document on the right, page 1903,
Yes.
and we look at the bottom of the page, we see that there's to be evidence of unconditional refinance approval by the expiry date, and that's a special undertaking.
Yes.
And that was different, do you agree, from what was discussed at the meeting on the 29th of November, which was that they would be making, they would continue to seek refinance?
Yes.
And then you see at the bottom of the page on 1903, the document on the right, that there's a requirement for 6 months interest
Yes.
to be deposited. And again, that doesn't seem to have been discussed on the 29th of November.
Yes.
You agree with that?
Yes.
And in the course of preparing to give evidence, have you considered the differences between what the bank had been discussing on the 29th of November 2010 and what the bank then offered at the end of December 2010?
I do recall seeing a document the approval that had the requirement for cash cover.
Sorry, could you say, oh, you'll have to say that again.
I think I do recall seeing an approval which required the cash cover. I'm not sure.
An internal approval, you mean? Yes, but my question is, do you recall having turned your mind before giving evidence to the difference between what had been discussed on the 29th of November 2010 with the customer and what was offered at the end of December 2010?
No, I hadn't.
It's not something you thought about?
No, it's not something I picked up in the discrepancy. Sorry.
All right. Having noted it now, do you have any view about the particular course that the bank took in discussing one thing on the 29th of November and then having something different in the offer that was sent out at the end of December?
No, I don't. A couple of occasions I've seen terms in papers that have been approved separately, approved differently. But did you want me to talk about the deposit, possibly why the deposit's there, or I can only give an opinion.
Well, you're obviously experienced in relation to the operations of these sorts of sections. Well, if it might help the Commissioner if you explain your view as to the use of that sort of deposit.
So when recall when the facilities were first established, there was an interest capitalisation built into the facilities. So you could be sure that during the term of the facilities, there'd be no need for further equity, and the interest would be it would be automatically debited against the loan account. Post that approval, or when that facility ended and a new facility needed to be put in place, there would be ongoing reliance for the shareholders to put in funds to pay the interest. Remember, this is Wildlines and Silversun earned no income. They only held land and they earned no income. So my opinion, the requirement for the guarantee was to ensure that there were sufficient funds available to meet interest as it fell due.
Now, I just want to make sure I understand that. Your point is, initially, the loan allowed for the capitalisation of interest when it was first established?
Yes.
And therefore, interest wasn't being paid on an ongoing basis. It was just capitalising.
Well, it was being paid.
It was being paid out of the available loan funds.
Yes.
And then you know that it was no longer permitted to be paid out of the loan funds. It had to just be paid on an ongoing basis.
Because the limit was fully drawn.
And as at this date, do you know whether the available limit remained fully drawn?
No.
Okay, so when you, again, I just want to understand when you've expressed your opinion, the assumption that you've made is that there's no longer available capacity, or the bank no longer has security over the payment of interest.
Well, there's no
right?
mechanism, yes. Yep.
All right. Now, as far as I can tell, your statement doesn't exhibit the response that was sent by Mr. Kelly.
No.
All right.
No.
And I'm sure Mr. Sherry would like to know, why didn't you exhibit that document?
I don't recall seeing that document until today.
And can we go then to that document, which is RCD.0024.0014.0039? So I just want to take you to the second page, which is .0040. So this is where there's a reference to the interest deposit account. This is that extra clause of holding 6 months' interest.
Right.
So that what Mr. Kelly is recording that had been conveyed to him was that either they could deposit interest into an account or they could prepay the interest.
Yes.
And if they were prepaying the interest, would that also have addressed the type of concern that you're speaking about?
I'm just trying to identify the paragraph around the prepayment. Okay. All right. Is that that's the paragraph starting with the discussion?
Yes.
Yeah.
So perhaps if we just run through what I understand to be the points you want to make. First, you'd never seen this letter until today.
Correct.
In the reviewing of the file, you hadn't been able to pick up this letter and no one had pointed it out to you.
No.
And the second is that your speculation as to the 6 months interest is that by having the 6 month interest sitting there, then that at least gives the bank security over that interest.
Yes.
And that's a reason why the bank would want it,
Yes.
to shore up its security position.
To ensure that the cash was available to pay interest when it fell due.
And the complaint or a complaint that is being made by Mr. Kelly is that the bank is double dipping because it wants to both have interest paid monthly and also to always have 6 months interest paid or put on deposit.
Yes.
Do you agree with that point?
I've seen that in past transactions from my experience. Yes.
So you've seen a situation
yes,
where there has to be
yes.
both a deposit and the payment of interest.
Well, yeah.
Right. And then if we go to BRP-36, this is the breach notice that is sent on the 13th of January 2011.
Yes.
And is it the case that this is exactly what you would expect would be done today in the management of your section, that in the event that the facility had not been rolled over in these circumstances, that the breach notice would be given?
I'd expect it, yes.
All right.
Yes.
And does it matter that there's been this ongoing discussion starting at the end of November 2010 and correspondence at the end of December 2010?
The facility has expired.
And by giving the notice, then as a matter of law, BankWest is preserving its legal position.
I don't know. I'm not a lawyer.
But that's what
Yeah,
you'd
yeah,
expect
that's
people
what I'd
within your
expect, yeah,
section to do,
yes.
to just give the breach notice in
Yes.
those sections.
Yes.
All right. And then there's a discussion that occurs, or a meeting that occurs at the end of January 2011. Are you aware of that?
Yes.
And you've also exhibited a note in respect of that discussion.
Yeah, where's that? I've seen.
All right, well, we'll bring this up. It's BRP-59 CBA.4000.0072.0229.
Yes.
So now again, this is CBA's internal note in relation to this facility. Is that right?
Yes.
And you've reviewed it in preparation for giving
Yes.
evidence?
Yes.
Can I just draw your attention to a few parts. You see halfway down the page, the third bullet point under what Mr. O'Brien said, the facilities would have reverted to default rates of 18.81%, but a negative margin of 10% has been applied, so the rates are close to what they would have been if the facilities had not expired.
Yes.
Right. And then if you go over the page, you see it's explained that what Mr. O'Brien had said at that meeting is that the margin will be subject to the risk grade. Those are the top two sentences.
Yes, I see that.
And then Mr. O'Brien explains that the refinance market, or he knows that the refinance market is still relatively closed.
Yes.
And is it the case that what was happening internally was that Cam was attempting to hand the file back to Property Finance, and Property Finance was saying they didn't want the file?
The only evidence of that I see is John Howe's note that I referred to before lunch.
All right, well, let's have a look at these documents. So if we go to BRP-60,
Yeah.
so this is the note that's prepared by Cam.
Yep.
Is that right?
Yes.
And we can see somebody's crossed out 18 February, so the date of it is the 22nd of February 2011.
Yes.
And the approval that's sought is, you'll see this in 1.3 on the first page,
Yes.
to amend the risk grades back to the pre-Magellan risk grades to extend the facilities of Wildlines and Silver Sun to the 31st of December 2011.
Yes.
And you'll see there's an explanation of this approach in 1.2, which is that the risk grades have been downgraded by the Magellan review as a result of concerns about the Silver Sun property, and the concerns have now been addressed through an updated valuation and additional security from shareholder guarantees.
Yes.
Page .5577. You see the section which is current defaults, and the only default that's identified is that breach letter for the facility expiring, issued on the 13th of January 2011.
Yes.
And otherwise it's explained there were no monetary or non-monetary defaults.
Yes.
And then you see in 5.2, it's explained that the updated valuation indicated that there had not been a decrease in security value, and so in fact the LVR was now only 37%.
Yes.
And then in 5.4, it said the customer has advised that they are not able to provide 6 months interest on deposit, as well as paying interest as and when it falls due. It has been agreed that they can provide 3 months interest up front on a rolling basis if the facility is extended.
Yes.
Now, you may not have examined the documents in this much detail, but the internal note doesn't seem to have been that Silver Sun or Wildline said they couldn't pay 6 months interest. It seems to be that they said they didn't think that was reasonable. Is that your understanding? Or understanding? Would it help if I showed you that note?
Yes.
Can we bring that up? We'll put it up on the other side of the page, CBA.4000.0072.0229. And you see at the bottom half of the page are the things that Mr. Kelly said during the meeting.
Yes.
Then you see the last the third last point on that page, they can prepay 3 months' interest in advance on a rolling basis starting from February 2011.
Yes.
And he did not believe the 6 months' interest on deposit was reasonable.
Yes.
All right. But that seems to have been, and I don't say this critically of anyone, but that seems to have been understood and reported by CAM as meaning that they couldn't provide 6 months' interest on deposit.
I don't know. I don't know.
You see, that's what's written in the CAM report, isn't it?
It says he did not, is this the report you're referring to here?
Well, that's the file note on the right-hand side, and on the left-hand side it says the customer is advised that they are not able to provide 6 months' interest on deposit.
Yes.
Because ultimately, the fact that that's what's reported has an effect on the opinion expressed by Mr. Howe, doesn't it? Or you're not familiar with that level?
Yes.
That's right,
yes,
isn't it?
Yes.
All right.
Yes.
And then if we go to 5.6, and in the third dash point in relation to Silversun, the CAM note explains that the customer had noted that the Silversun facility limit was reduced by $250,000 in September 2010, which is more than the bank required to be lodged on deposit. You see that?
Yes.
And then at the bottom of the page, you see there's section 6, which is the revised strategy.
Yes.
And this explains that in 6.1 that the Magellan review noted that an urgent valuation was required for the Silversun property to ensure that the property value had not significantly decreased, but Wildlines was considered status green.
Yes.
Now that's, we've seen already, that's what came out of the review by Grant Thornton of this file.
Yes.
It's slightly different from what the review panel ultimately recommended.
Yes.
And then it's explained in 6.2 that the revised valuation was obtained and, in fact, the property value hadn't decreased, it had increased.
Yes.
And then 4, it's explained that the customer acts professionally and is cooperative with the bank. They understand the need to exit these facilities from the bank and are working to enhance the value of the properties in order to obtain refinance.
Yes.
And then if we go over the page to page .579, in 6.6 we see, although refinance does not appear to be a feasible option at this point, it is noted that an alternative option to appoint a mortgagee in possession to the Wildlines and...
Sorry, what number you?
I'm sorry, .5579, should be page 5 of 10.
Okay.
Have you got that?
Of 5 of 10, yes.
And you see 6.6 at the top.
Yes.
Now, to be clear, as far as we can tell, there never seems to have been any serious consideration given to appointing a mortgagee in possession. Do you agree with that?
I agree with that.
And then if we go over the page to page 6 of 10.5580,
Yes.
you see this is the risk grade and pricing. 8.2, we recommend that the group be regraded to the pre-Magellan risk grades, given that the issues raised by the Magellan review have been addressed.
Yes.
And there's a recommendation in 8.5 that the pricing for the facilities be decreased to 3.5%.
Yes.
And then if we go over the page to .5581, this is the recommendations and approvals sought.
Yes.
And you see much of this repeats what we've already looked at, and then it's proposed that the risk grades are upgraded. We see that a third of the way down the page.
Yes.
The facilities be extended to the 31st of December 2011.
Yes.
And then in the third last point, the group be returned to the control of business credit.
Sorry, which point?
See the third last dash
Oh,
point
yes,
on the
yes,
page?
yes.
So you recall we were having a discussion a little earlier about whether business credit is a separate section of a separate division of the bank, separate from property finance. Does this help you to say
Yes.
whether business credit is a separate division?
Business credit
Yes.
is a part of risk management. It's the credit department that supports a business.
Okay. So your understanding is that it's to be returned to the control of the risk department?
Within the business, yes.
I'm sorry, within the business. That
that supports the business.
is, it's not to stay within CAM, it's to go back to...
It's where the decision making goes from CAM to business credit.
Yes. And then if we go over the page to .5582, and this is what gets signed off on by the chief manager,
Yes.
and relevantly at the last 3 points we see that the interest is to remain at 3.95%.
Yes.
The facilities are to be subject to cross default,
Yes.
and the extension of the facilities is only to be considered to the 30th of September 2011.
Yes.
And is it fair to say the point you would make about this is different people look at these files and they form a reasonable view as to the risk involved with the files and therefore the approach that ought to be taken?
Yes. Yes.
And the fact that the proposal made by Mr. O'Brien and the other part of the CAM team, which presumably was Ms. Rivera, the fact that their view as senior managers is different from the state manager doesn't really tell us anything other than that different people look at things and have different views about it.
Yes. Yes.
And is there anything in your experience, obviously you weren't involved in BankWest, but in your experience running the GRS, is there anything that seems unusual in this approach to you?
In this approach,
Yes.
a different hierarchy? No.
And can we then look at CBA.4000.0089.0617? So this is a collection of emails. Can we go first to the page .0628? This is Mr. Edwards, who we understand was the manager of commercial valuations within BankWest, emailing Mr. O'Brien with comments on the valuation. Have you looked at this document before
I
today?
recall seeing this before.
This wasn't part of the file that you
No,
looked
this
at?
wasn't part of the file.
All right, maybe if I just ask you some general questions then. Is there any, this is obviously some commentary being provided by Mr. Edwards as to the valuation. Is there anything unusual in the internal valuer providing comments on the external valuation?
I can't comment on the BankWest process.
Okay.
But it was practice in CBA.
Yes, and the only particular point that seems to be noted in relation to this by Mr. Kelly is that it has taken some months for this to be resolved. that is, the valuation is provided in October of 2010, and Mr. Edwards is commenting on it in March of 2011. Does that seem like a particularly long period of time to you?
I can't really comment on that. I don't know what discussions there were in between, or whether there was anything in between the request and this memo.
All right. Can we go to CBA, I'm sorry, to page .0630? This is an email you have seen?
Yep.
This is the email you were referring to before, sent by Mr. Howe?
Yep.
Sorry, just because it's being recorded, you'll need to speak a bit louder.
Okay.
That's the email you were referring to?
Yes.
And this seems to be Mr. Howe, as the State Manager of Business Credit, pushing back on the CAM view that it should be repatriated. Wildlines and Silversun should be repatriated back to him.
Yes.
Is there anything unusual from your perspective in that sort of approach from Mr. Howe?
No. From my understanding, from what I've been told, is that practice was that when a customer was transferred back to business credit, they were asked to review prior to transfer.
All right. And then, so on its face, this just appears to be the person who is going to have to then take responsibility for the files, saying, I don't really want the files. They should stay with you.
Making comment about the file, yes.
Yes. Making comment and then saying, I'm not comfortable, or I have difficulty with repatriation to the business, and that means his business. Is that right?
Well, his view is in the last paragraph of the letter, yes.
And you haven't discussed this with him, have you?
No, I haven't.
You haven't really discussed this file with involved in it?
Yeah, I have discussed it.
Oh, you have?
Yeah.
Who have you discussed it with?
Andrew Steele,
Okay.
Greg O'Brien.
Oh, and what was their... Let's start with Mr. Steele. What was Mr. Steele's view about the management of the file?
Well, he worked for Mr. Chapman at the time. These issues, particularly, although he mightn't have been involved in this part of the file, but he was... his view of the management of the file was that he was surprised by the events coming up to expiry of the initial facility.
Surprised by what events?
The events of Mr. Paul Clark's note, and that's he referred more. When I spoke to him, we talked more about that period.
And sorry, what you'll need to be a bit more helpful for us.
Yep.
I think he was surprised by what events precisely?
The note that came from Mr. Clark.
Which note is that?
It's the email that's in my attachments.
Oh, about how the business was to be managed.
Yes.
That's the general note, not the one related to this specific file, is that right?
The general note, yes. Yeah.
And he was surprised by that, why?
Yeah. I don't think he was expecting it. Yeah.
Wasn't expecting the bank to take that direction, is that right?
Yes.
And was he surprised at its application to this particular or these particular files?
I didn't ask him to be surprised about his feelings about the application.
To these files? All right. Did you speak to him about these files?
You mean Silversun and
Wildlines?
Wildlife? Yes.
Okay. And what was his view about the way in which they'd been managed?
Well, he was manager before this, right?
Yes.
He didn't offer me a comment on the way they were managed.
After he was no longer involved?
Well, even during he was involved, he was just told me he was managing the files. All right. Right.
And then you spoke to Mr. O'Brien?
Yes.
And did Mr. O'Brien have a view about the way the files were managed?
His only view on that he needed to have a look at the valuation and with the view to send it back to the business unit, the issues raised by Project Magellan, and consider the issues and have a look at the file and consider the issues that might come up in terms of the options, which I think he's covered off in one of his notes.
And when you spoke to him, did he express a view about the attitude that was coming back from the business unit?
No, he didn't.
All right. And so if we then go to .0640, and maybe if we bring up .0640 and .0641, which is the next page as well. So what happens then is that Mr. O'Brien gives a very detailed response to the points that have been raised by Mr. Howe.
Yes.
And ultimately, the position of Mr. O'Brien prevails and the files get moved back to property finance, or they get moved to property finance.
Yes.
They get moved out of CAM.
Yes.
But that's not until May of 2011.
I believe so.
And was Mr. Howe involved in the property finance section?
No, he was in risk management.
And-
Credit decisioning.
Sorry?
Credit decisioning.
And you understand one of the complaints that Mr. Kelly has made is about the fact that the interest rates kept going up throughout
Yes.
the period that he was with BankWest.
Yes.
I just want to work through a few points about that. One is these internal issues that were happening about whether or not the file should be in Project Magellan, whether it stayed in Project Magellan, whether it got moved back out of CAM into property finance. Would they have had any effect on the interest rate?
They may, I don't know. Certainly the interest rate decision was made, you talking about the 3.95, is it?
Well, there are a number of decisions, but that's right. There was a 3.95% increase for Silversun in about September or October of 2010.
Yep.
And that presumably would have been made based on the risk grade that had been given to the facility.
Yes.
And the risk grade had been increased by the Project Magellan panel.
To 7+, yes.
So logically, that would have affected the interest rate.
Logically, yes.
Beyond that, once you get into what's happening in early 2011, is the to and fro over whether or not the files get moved out of CAM something that would have had a bearing on the interest rate?
It should have, and one of the things I called for was to look at the analysis behind the 3.595 interest rate, which was nothing available.
There was nothing available.
Yep.
Right. Did you get analysis as to the other changes in interest rates?
I asked for the models that were applied back, particularly the guidelines going way back, and nothing was able to be provided to me.
All right. Now, the other thing that I want to show you and get your comment about, Mr. Perry, is the email that was sent on the 28th of February 2011. I'll just turn that up.
Is this bundle of emails to go in?
I tender that, Commissioner. Thank you.
Exhibit 3.95, emails between Nathan Howe, O'Brien and others, March 2011, CBA 400000890617, 3.95.
Can we bring up RCD.0024.0014.0044? And this is an email we were looking at before, which is an email sent to Ms. Rivera, sent by Ms. Rivera to Mr. Kelly. Have you seen that document before today?
No, I haven't.
Okay. And you'll recall, you listened to Mr. Kelly's evidence this morning.
Yes.
You'll recall that Mr. Kelly, in response, made a number of points about these matters not having been mentioned in the meeting on the 24th of January 2011.
Yes, I do recall.
And you'll also recall that Mr. Kelly had been making inquiries about the interest rate that was to be charged on the facility.
Yep.
Facility.
Yep.
Facility.
Yes.
And that the response of Ms. Rivera was, in relation to your query about the interest rate for Wildlines, we note that the facility is expired and the bank's standard default rate is 18.81%.
Yes, I see that.
And as you know from the internal bank file note about what was discussed on the 24th of January 2011, there was a discussion about the interest rate being reduced.
Yes.
And that was a file note prepared by Ms. Rivera.
This one here? This one here?
No, the file note that we looked at before on the 24th of January 2011 had been prepared by Ms. Rivera.
Can I just go back to that?
Yes? Can we bring up on the other side of the page BRP-59? This is the note we were looking at. It's prepared by Ms. Rivera.
Yes.
And you'll see the third bullet point that Mr. O'Brien had advised a negative margin of 10% has been applied.
Yes, I see that.
Do you have a view as to the appropriateness of this email on the 28th of February 2011?
That's inconsistent with the email that says the default rate is 18.81. It doesn't refer to the 10%.
Do you have a view about the various additional requests being made for information in that email of the 28th of February 2011?
No, I don't.
All right.
No, I don't.
Commissioner, I don't have any further questions for Mr. Perry.
Yes, thank you. Mr. Sherry?
Just one question, Commissioner. Mr. Perry, at transcript 2596, about line 3, you were asked about the proposal that the customers be asked to refinance, and you said that was in accordance with prudent banking and regulatory approval,
Yes.
or regulatory approach, I should have said.
Yes.
What did you mean by regulatory approach?
Sorry, repeat the question. I missed the first part again. Sorry.
You were asked about the request that there be refinancing, that is, that they go elsewhere,
Yes.
and you said that was consistent with prudent banking and, quote, regulatory approach.
Right. Yes.
And I'm just asking you, what did you mean by regulatory approach?
I recall that I was talking about regulatory approach into the management of the property limits for Mr. Clark, if I recall. And there's a couple of aspects there that banks have obligations to maintain their credit exposures by counterpart. There's another requirement also that banks manage their credit appropriately. And my view on that was that the refinance and working with the customer was a better approach under those credit management standards.
Thank you, sir.
Okay.
Thanks, Commissioner.
Yes. Thank you very much, Mr Perry. You may step down. You're excused. Yes, Mr Owen.
Thank you, Commissioner. Commissioner, there's going to be a slight change of counsel at each end of the bar table. Could we adjourn for 3 minutes or so while we do that?
I'll come back at 10 to 3.
Thank you.